Good day. Dan Davis, ADK Wealth Advisory Group, President, co-founder, and co-founder of Financial Planning World. We're in our series on financial planning topics, specifically investment planning, risk management. So in our 101, we kind of outlined our philosophy, the basics, the 101 type discussion. Today we're going to take it to more of a, using the metaphor of college classes, we're going to go to the 301 level. In our 101, we broke out the concept of blending technical research and fundamental research. We're going to sort of drill down into that today. So let's start with fundamental research. In the Western civilization, that's what we're most accustomed to. When I studied investment management at Drake University back in the 80s, that was exclusively what we were taught. Stuff around what's going on with monetary policy, what's happening with corporate earnings, valuations, etc. It's really all the research that's driven around what's happening in corporate and economic news, and then everything that sort of flows from there. As I said, that's the way that the Western civilization looks at it. Technical research, if you think about that as another piece of the puzzle, it's what the Eastern civilization really started back in agricultural markets in China back in the day, before the day. And technical research ignores fundamental, and it just looks actually at what's happening in trends. So are trends moving up or trends moving down? And there's a whole variety of things around that. So you've got things like moving average crossovers, overbought, oversold, Fibonacci. And it's this trend analysis to make decisions of buying and selling that you'll see from hedge fund, day traders, etc. to people who are much more active in their trading. And so what we try to do is at different stages of the economic cycle, we try to be cognizant of these two major investment philosophies and research systems and then use them at different times. So let's do an example of where we're using fundamental research. Fundamental research pretty much is used throughout all four parts of the economic cycle for us. Early stage, mid stage, late stage, end stage. As you know, that's the recession. So when we start to get late stage in the economy, we'll start to see the economy still growing, but at decelerating rates. We'll see corporate earnings still growing, but at decelerating rates. You'll start to see inflation creeping up. So there's a lot of those types of things. And that's sort of a sign that a potential storm is coming. And there's a lot of different kind of storms that can come. So along the way, you'll have like a thunderstorm. And a thunderstorm you really don't do much with, because trying to get it right on the front end of a thunderstorm and the back end when they're really quick is impossible. But when you get to the point where there's a major hurricane, a recession, some kind of a 2000, 2008 debacle that just has market collapse, you don't know that that's necessarily coming unless you're lucky. But in the fundamental research, you can start to see you're late in the cycle, and that's where storms are much more than your normal thunderstorm. So you'll then start to take less equity risk. You'll also start inside of your fixed income to start to take less credit risk and more safe bonds, if you will. And so that's when you start being on alert that you're looking using technical research to start to pay attention much more often, because late economic stage is where most of the long-term damage occurs. And then you're going to start using technical research, those moving average crossovers, et cetera, I talked about, to discern when markets start to pull back. Is this sort of just a normal thing, or is it abnormal? If so, then you have to decide, are you just going to ride through it, or are you actually going to reduce equity risk even more? And that's where the science and the art and the experience really come into play. Because as I said in the Investment 101, in real time, you really never know all the signs that you're looking at, what you're really looking at, until you've made your decisions and you're looking back. And that's why having 30 plus years of experience doing this, learning how to blend these two together is, in my opinion, best practices to help you on your pursuit of your financial goals and dreams. And we'll continue to do that. We're going to continue to sort of pull threads on a lot of things we do for those of you who want to watch. We'll be sharing it on Facebook, LinkedIn, our website, discoverindependence.com. Whichever way that you roll, whether you are more of a person who seeks out to the website or uses the social media, feel free to continue to connect with us. I'd also encourage you to share this with some of your friends, because as we've talked before, the way that we're going to grow both 80K and financial planning world is through word of mouth, and we appreciate you in doing that. So signing off from the St. Louis office, have a great rest of the day. Bye-bye.